Hi everyone, welcome to today's video. So the markets are hitting an all-time high almost every single week and people are making a lot of money in the stock markets. So people are predicting that, hey, you know what, we are in the middle of the bull run. Some people are saying that we are at the peak of the bull run. Some people are saying that, hey, you know what, bull run has not even started. It will start in a few years from now. So there is a lot of confusion going on. So from that perspective, it is very important to understand that A, are we in a bull run? And second and more importantly, that is India going to be a major participant or beneficiary of this bull run? This second question is very, very important. This is a pure macroeconomics concept. People just literally give their opinions, but they don't back it up with facts and data. So on this video, I'm going to take you through some very important economic arguments that why India will lead this bull run and how you will benefit from it. It is very important video. Even if you are not interested in stock markets or if you're just a student, please watch it. As an informed citizen, you must understand these macroeconomic concepts as to how your government is spending your money. Are they doing it productively or not? Are they collecting taxes efficiently or not? So we are going to have that broad discussion. Now, when people start speaking about the word macroeconomics or when we start analyzing countries' economics, it gets very confusing. It gets like very economics heavy and people lose interest. Essentially, you should assume a country to be like a house. So in house, we have like productive members of the family, so they will bring in money. Then there are dependents, for example, children. So children depend on the parent. Similarly, your household will incur certain expenditures. Some of the investments would be made on your education. Some expenses would be made on traveling and taking vacations. So imagine a country to be a household, and if a household earns really well, and if that household invests really well, that household is very prosperous. And you must understand macroeconomics from this simple point of view. Now, let me tell you the story of Singapore. Singapore, we all know, is a very prosperous nation. It is one of the richest nations in the world, and citizens there have a very high standard of living. If I were to ask you a question, so please reply in the comment section. If I were to ask you a question, why is it that Singapore is so prosperous? There can be multiple reasons, but give me the most important reason. Why is it that Singapore is so prosperous? The reason is politics. That Singapore's politics is very progressive. Mr. Lee Kuan Yew, who was the Prime Minister of Singapore, he actually instituted changes that are having lasting impact on the country's progress. His regime is considered to be one of the foremost regimes that created a massive positive difference in Singapore's economy and indirectly made people rich. Again, going back to that example, that in order to create a prosperous household, if parents are very smart, vigilant, they are pushing their kids to learn new things, they are spending the money on the right kind of things, of course that house will become more productive and more wholesome. So the same philosophy applies in Singapore, that their household became really rich. Why? Because Mr. Lee Kuan Yew, who was the parent of the house, he instituted a lot of positive change and brought a lot of positive difference in the Singaporean society. People in Singapore literally revere him. Not like in North Korea where people are pushed to revere their leaders. In Singapore, there is genuine respect for Mr. Lee Kuan Yew. Now this brings me to a very interesting question that, hey, India's politics, let me not say anything, India's politics is very divisive and there are a lot of negative points. This is not a political debate. We will talk more about economy today, but all of us understand that India's politics is very regressive. But despite all that, do you really believe that India can, if not become Singapore, but can it improve from its current infrastructure and current base? My answer is yes, and I will help you explain why. Again, going back to that analogy that to create a rich, prosperous household, what is required? Number one, we need to increase the household's income. This is point number one that we are going to talk about, why India will be able to improve its income. That's one. Second, it is important to understand that the government should be undertaking useful expenses. I'm not saying that it should become super effective. Of course, that's the ideal case scenario. But at least, is the government on the right track in terms of spending money? Are they spending our money productively? That is point two. Point three, are there external factors at play that are going to push India in the right direction? So let me have that conversation with you. Please watch the video till the very end. This is not a political video. I don't care about BJP, AAP, this, that party. I don't care about them at all. My goal is to help people become richer. Any party in power, so be it. I don't care. As long as people are becoming rich, prosperous, helping each other out, that is what I care more about. I don't care whether it happens under BJP's regime or whether it happens under Congress's regime. So with that said, let me take you through each of these factors in more detail and let me help you understand in a very simple, easy to understand language why India can actually become really rich. Number one, please ask yourself the question that, hey, can India earn more money? So what do I mean by India earning more money? It simply means that can India's GDP improve going forward? The short answer is yes, and let me tell you a story around it. Please listen to it holistically, only then you will understand. So, part one of the story. Look at this tweet. This is a tweet by the IT department, income tax department, and what does it say? So it simply says that only 1.46 crore individual taxpayers are liable to pay income tax, right? That in India, out of a total population of approximately 1.3 billion people, only 1.46 crore people are liable to pay income tax. We all understand that India operates from a very low tax base, that the percentage of population in India which pays taxes are very, very few to begin with. This tweet was made last year, so the data is somewhat concurrent and relevant. Very interesting question for you. This is a question that I've created on Probo, which asks how many people are liable for paying taxes in this current fiscal year. This is a very interesting question. Do put in your trade. You can win money. This is literally free money. If you watch this video and understand this video, you will be able to easily decipher the answer. Also look at additional data on Probo and other platforms before you take this trade. I am putting these questions so that the knowledge becomes relatable, right? So that it does not just remain like a theoretical exercise that you just come, listen to the video, go away. At least you think, you research more and you start implementing that knowledge. That is the goal. That way you will remember all these macroeconomic concepts. Okay, so back to our topic that the current tax base in India is very, very low. It is approximately 1.5%, right? So there are very few people who are paying taxes as of now. Now, if I ask you the reason that, hey, tell me why is this happening? Your answer could be manifold, right? Number one, you would say that, okay, black economy, that majority of the industries in India are unorganized, so they are getting more and more organized. There can be a bunch of macroeconomic factors here, but we all understand that this tax base is going to go up with time, right? It will automatically happen because why? If you take a look at the situation 10 years ago, what used to happen before the Aadhaar system came in India, there was no identity. Why do you think that the unorganized sector in India is so big? The unorganized sector is so big because people did not have identity to begin with. Even if the government wanted to tax all these people who did not have an identity, how would they have done it? They cannot. Then there was Jam Trinity, right? Jandan, Aadhaar, Mobile, right? Then people started opening more and more bank accounts. So all this system of identification, creating a database, linking it to bank account does what? It creates an organized sector. Now you will say, Akshat, okay, what is the purpose of having this organized sector? How does this benefit? This benefits because more and more people start paying tax. Now, right now we are standing at 1.5%. If this tax base grows to 5%, it will create magic. Now you'll say, okay, what type of magic? So this brings me to point 2. There is something called as multiplier effect, right? So I explained earlier that there is something called as velocity of money. So velocity of money means that if I have 100 rupees, if I give you that 100 rupees, what will you do? You will go and buy a papaya. Or if you like Lauki Turai Tinde, you can go and buy Lauki Turai Tinde also. So that sabzi vendor or fruit vendor gets 100 rupees. Then he goes further, he buys like a atta chawal, rice or dal. Then that dal wala or rice wala gets 100 rupees. Then that dal wala, rice wala will go and deposit that money in the bank. So this money is changing hands multiple times. This is called as velocity of money, right? That at what speed the money flows into the economy. That the investments or the expenses that the government makes, it also has a multiplier, right? For example, if the government invests the money in productive assets, right? Productive assets would mean something like building a bridge, building a road, bunch of different things. This is called as capital expenditure. Multiplier of this will be high, right? It will have 2 or 3 multiplier. Similarly, if the government is undertaking expenses on, let's say, non-productive or revenue expense, right? This is called as the revenue expenditure. This is literally just to run the operations. Then the multiplier of that will be on the lower side. So we'll speak about this subsequently in the video. But the point that you need to note down is very simple, that as the tax rate improves or the tax base improves, that instead of if 5% of India's population starts paying taxes, then what will happen? Government will have more money to invest because their majority income comes from taxes, right? As more people start paying taxes, government's income will improve. As government's income will improve, this multiplier effect will increase, provided that more productive expenses are being undertaken. I hope this point is clear. This is a super complicated topic that people explain. I've explained it to you in very easy to understand language, and hopefully you get the logic that as more and more people start getting identity in India, the sector start getting more and more organized, this tax base will increase exponentially. It will literally increase exponentially. And what impact will this create? This will create a lot of impacts. We'll speak about that. But one key impact that will happen is that the government's income will also grow. They will have more money. So again, going back to that household analogy, that if government or if your house is getting more money, if your parents are getting more money, then they can invest it more properly. They can take you to trips to Europe or Switzerland, wherever, right? So bottom line is that as governments get richer, the citizens also can get richer, provided that the government is taking the right kind of expenses. Now, if some of you understand economics, then you might say, Akshat, this is like getting a little bit confusing, because when I read on the internet, it says that the GDP of India, right, which is how rich India is, the GDP of India seems to be very high. We are like 5th rank in terms of our GDP, right? So let me show you that number, right? So this is the GDP of India. If you take a look at the GDP of India on your screen, it says that India's GDP is $2.651 trillion, right? You have China above us, you have US above us, Japan above us, and Germany above us. So by this logic, we are on number 5, so we should be a rich country, right? That 5th number GDP is not bad. But why is this matrix wrong? GDP is the total output. It means, imagine a household where parents are earning a lot of money. For example, if your parents' salary are 10 lakh each, so your household is 20 lakh. And if the household only has 4 members, then what is the income per family member? 20 divided by 4. So that means 5 lakhs. But on the flip side, let's imagine a household where there are 100 members, right? And parents are only bringing in 20 lakhs. Then the income per member of that household will come down. Right? So that is the logic behind GDP, that GDP in absolute terms is not the right measures. GDP per capita means that GDP per individual of India, that comes out to be very low. Now why is that logic correct? Because let me quickly explain that as well. GDP is what? Is the total amount of money that India is producing, so to say, right? Very simplified stuff. Now if India, the population is very high, right? There are so many people who are earning money. So of course the GDP in absolute terms will be very high. But if you take a look at GDP per capita, right? GDP per capita or per individual basis, the GDP per capita of India is lower than that of Bangladesh as of now, right? So which is a very worrisome sign. It means that on per capita basis, that in real terms, that we are a very low income country as of now. Now you will say that, Akshat, you talked about that, hey, India entering into bull run. On the other hand, you are saying that we are a very low income country, even below Bangladesh. I'm like super sad. Okay, cheer me up. So you must have heard of the phrase that hitting the rock bottom, right? So if you are at the lowest base in your career or life, things can only move up, right? So from that angle, if our GDP per capita is super low right now, and if there are avenues to improve taxation, if there are avenues to do good things in India, of course, the GDP per capita has the potential of improving massively. So even this sad news is golden news in a way. Now, since you understand the concept of GDP, let me also take you through one other important concept here, which is the tax revenue to GDP ratio. Now, this means that how much tax is our government making in percentage of the GDP, right? For example, if you scroll through this particular slide, you will see France makes 46.2% revenues. The government, if the GDP is 100 rupees, the French government makes 46.2 rupees, right, in terms of tax revenue. So they have more money to spend on their citizens. Similarly, if you go to Hungary and bunch of different countries, you will see good stuff, right? I mean, this, now look at for India. So I'm not able to find India, so I'll do Control F and try to find India. Okay, so India is somewhere even below Burkina Faso, right? So it is like horrible news. Burkina Faso is a very low end country in Africa somewhere. We are even below that in terms of tax to GDP ratio. What does this show? This is actually a very worrisome sign if you just ballpark it. Now, I don't have data to back it up, but what does this tell us? This is like madness, right? You have African countries that are beating India in terms of tax collection to GDP ratio. It simply means that citizens in India are doing a lot of tax chori. I'm not trying to say bad stuff about people, but honestly, there is like a lot of tax chori that goes in India. Now, why is that? For example, we look at the tax revenue to GDP ratio, right? We know that GDP of India is high, so the tax collection should also have been high for this ratio to have made sense. But our tax revenue is very low and our GDP is high, right? This simply means that tax revenue is low in India. This is a worrisome sign, but is also a good factor for India to grow. So do check out my question on Probo and try to estimate how many people in India will be paying taxes. that try to estimate that how many people in India would be liable for paying taxes for this year. This ratio will improve and India will improve with it. This is just a matter of time and you and I will see this result in our lifetime very, very easily, very, very easily. This is literally the first and the most important concept why India will grow from a macroeconomic perspective. Now let's move on to the second thing. So one, we quickly analyze that, hey, if this house has great earning potential. So we spoke about the fact that yes, India, more people will get taxed, more organized sector coming up. So this household will become rich at some point in time. Now, is the household going to spend wisely? Now, this is a question that we need to answer more holistically. Now, please don't get into the argument that, hey, Akshat, you talked about central vista, not effective spending, government wastes a lot of money. Yes, government spends a lot of money. Those are specific instances that I'm talking about. That does not mean that entire government, whatever they do is bad. No, that's not the narrative. Wherever the government is going wrong, I, as a tax-paying citizen, has every right to speak negative on those projects, those aspects. If idols of elephants are being installed and thousands of crores of taxpayers' money is being spent, I am going to call out that expense as useless expense. That does not mean that just because some idols have been built in general or XYZ project has been built in general, that entire spending in general of billions and billions of dollars that government spends, that is bad. We are trying to look at an aggregate result. Okay, so let me now make the argument that even the spending of Indian government is on the right track, so to say. Of course, super complex topic, but let me take you through it. Now, before I show you the actual spending trend, let me take you through very important macro concept called as capital expenditure and revenue expenditure. We talked about it briefly, but here is the multiplier that I earlier spoke about. According to Professor M.G. Chandrakant, this is what the numbers say. That capital expenditure, which are productive expenses, generate 2.45 multiplier. On the flip side, revenue expenditure generates only 0.99 as the multiplier. Okay. So essentially, as long as capital expenditure is increasing, it will lead to multiplier, which will lead to growth, right? This is the simple format which we need to understand, and we also understand now in economics terms. Now, now let me take you through some of the spending patterns. This is the entire timeline of capital expenditure from the 90s, and you can see that back in the 90s, we used to spend 24% of the government expense used to go to capital expenses. This is good productive expenses. Why more expenditure would have taken place in the 90s? Because it also depends on the economic cycle. In 1991, India was opening up. So the percentage of budget that used to go for productive expenses was higher, right? For example, in economic downturn, for example, there was 90s crash, right? So during this time, what would have happened? Rather than money going to capital expenditure, where would the money go? The money will go to subsidies, right? So subsidies are not capital expenditure. In the economy, people are suffering, then government will need to step in and support. So yes, it's very easy to criticize that the capital expenditure fell to only 15% approximately. We also need to understand the economic cycle going in the background. Then it started rising, right? Then it went down generally, right? Literally for a decade, there was hardly any major spent on capital expenses. Why? And again, I'm not trying to criticize government or BJP. You guys do that in the comment section. Simple point here was that we started taking a lot of non-productive expenses. Now, in my opinion, schemes like Manrega are very important. Manrega, please read it up. It's our National Employment Guarantee Scheme. It is very important, but at the same time, it needs to spend money on productive assets. I don't know if this has been categorized into capital expenses. I don't think so. There was major spent on Manrega during this. Now, since 2015, we seem to be on the right track and we are going up. Despite the pandemic hitting us, the government is still spending a large proportion of its expenses on capital expenses, which is great, right? So we seem to be on the right track here. I'm not saying everything is great and hunky-dory, but at least we seem to be on the right track. Again, please, no politics discussion. Please watch news. Please watch Arnab Goswami. That Swami, they give enough of heat, right? My job is to teach you economics concepts so that you can make rational arguments and rational analysis. This is not a political forum. Okay, so moving on. Now, another important spending trend that I would like to show you where your money is getting spent is the pension trend, right? Now, pensions are non-productive spends and very small portion of money should be going out in terms of pension payments. Of course, people who are getting pension would speak against it. If you think about it from a nation's perspective, then this is not the right trend if the pension expenses keep on going up. So our government is doing a good job in terms of bringing down this pension expenses. How they are doing it, that's an entirely separate video altogether. But just understand the trend that, okay, we seem to be on the right phase in terms of doing this. So where is exactly the money? Because it's very easy to stand up and say that, you know what, Indian government is not spending enough money on healthcare and education, this, that. Okay, please understand a couple of things that Indian government spends or has always been spending a lot of money in interest payments. So let me take you through the trend also. Now this is the amount, this is the trend in terms of repayment of loans. We have taken a lot of money in terms of loans, and even this trend seems to be okay. Now why is there a spike? Because we are an emerging economy, we had to take a lot more loans. So all these repayments would have also started in some capacity. So important point is that all these trends indicate that we are spending the money in somewhat a right direction. General trend is that we are spending money in the right direction. So number one, we spoke about the fact that our government's earnings are going to improve with time as more and more sectors get formalized, more and more people start paying taxes. Similarly, in terms of spending, we are on the right track. We are taking a lot of capital expenditure, which is good. Trend line seems to be good. We are not out of shape in terms of repaying our interest. For example, if you check this graph, then 80% of the money was going in terms of interest repayment. If we check the graph, you will see there was a huge spike during this phase, right? We used to repay so much interest. Now at least this is coming down. So this is good news for us. Now comes third and final point, which are external trends. As a house, India has good potential to earn. Number two is spending money in the right direction. Third and finally, external trends. So there are several external trends that are supporting India's growth. I can't take you through all on one video, but I'll explain you very quickly. Number one, there has been disruption in China's supply chain related to literally everything post-COVID. There is a lot of backlash against China in international community, especially coming from the US, which is good news for countries like Vietnam, which are closer to China, and also for a country like India, because this will bring new business or businesses to India's ecosystem, which will be great. Number two, if you actually look at major growth areas right now, this will be fintech, this will be artificial, machine learning, blockchain. India has a very good tech workforce, which can add a lot of value. This mixed with the fact that VC funds are pouring a lot of money, there is a very good chance that in India, you will find technological clusters, more like Bangalore, right? It was only Bangalore in the previous IT run where Bangalore got developed and Hyderabad got developed. Now we will see more technological cities being developed. Now third and finally, the thing that pleases me the most about India is the culture of entrepreneurship. Literally like a few years ago, so I became an entrepreneur in 2018. Even back then, there was not much acceptability of entrepreneurs. It's not as if that parents used to encourage their kids to become entrepreneurs. Now that culture is changing, and this is huge because India is a culture-driven country. Now, when Kota started producing a lot of IITians, how much time did it take Kota to literally boom up, right? There were so many people who were just literally settling down in Kota. So entire Kota got developed in a very small span of time. Similarly, this entire culture of entrepreneurship in India is getting consolidated very, very quickly, which is a great sign for India because it's ultimately the entrepreneurs that generates job in any economy and they make the country more prosperous. And given the fact that so much money is coming from the VC space in India, people are finding it more acceptable to become entrepreneurs. We are on the right track in terms of improving our economic performance and becoming a more prosperous nation. So I hope you enjoyed the video. Do solve the question that I have posted on Probo. It would act as an indicator to me and it will help me ascertain what types of topics to make more videos on, especially around macroeconomics. Thank you so much and I will see you the next time.